Hi everybody, this is Osprey from mychartcoach.com, and in this video we're going to take a look first at PG&E here, and then we're going to take a look at natural gas. So first up I want to show you PG&E because it is moving and after hours trading. It's having a big bounce today. We had our eye out for a potential bounce after this big pullback, looking for a dead cat bounce. RSI at 8.5, you have Fasto down here at 1.49, so it's really at very oversold conditions, you know, with plus DI on ADX way down here at 458. And so, you know, having this multi-day huge drop from up here at 49 all the way down to 17, you know, was setting it up for a good dead cat bounce type of play. You can see how today's candle formed completely below the lower Bollinger Band, which is up here at 25.93. Now in after hours trading, it's trading at 24.68. So what you're looking for now is the candles to work back into the Bollinger Bands, the lower Bollinger Bands, that purple line, and then right next to it's the pink line, which is EMA 4. And so what you want to see if you're playing the bounce is a close above EMA 4 support at 261 or 2661. If that happens, what you'd be looking for is a potential gap fill here. There's a gap between high of day on that candle and low of day on this candle, and so just below 31 would fill that gap. So keep in mind, if it breaks above 2661, the bottom of the gap's at 29, and so the bottom of the gap level is always a tough level to break. One of the clues that PG&E would be, ticker symbol PCG, would be possibly bouncing today was this big volume spike. You could see there was an increasing volume pattern on the way down with the giant climax spike. Many times when you have a big volume spike at the bottom of a downtrend, that signals bounce players have loaded, and that's what looks like has happened with this after hours trading. Yeah, you could see here, this is from today at 10:30 this morning. You know, sticking with puts was the way to go on the way down. Obviously, they were incredibly huge money makers, so congrats to anybody that played the huge drop. And so what we are looking for today is possible dead cat bounce. You know, I'm not looking for call options to be roaring back, but you know, this should be a nice technical bounce setup. And so we were looking at that 18 level as a potential entry point if support held, and that level did hold today. It did end up breaking below. It came down there to 17. So I mean, it was really you know, it just got moving in after hours trading. What can you say? It broke above that 1854 level in after hours trading. You know, it closed very bearish into the close here today. It did have the giant volume, so you could tell people were biting down here, looking to load in the 17 to 18 support zone. And so now at 24.68, that's putting it above the 50 simple moving average. That's going to be the big level to hold tomorrow. You can see it was failing to break that level. And so if that holds basically at $22, that should signal more upside potential. And then what you're looking for is a break above the 100 SMA at 27.37. That's going to be the big level to break. You know, if it comes up and it hits that level and it fails to break, then that would signal a temporary top. You do have the gap up here. Let's see, it's between low of day on that day and high of day on this day. And so, yeah, right up here around just above 29, like I was saying earlier, that's going to be the bottom of the gap level. And so that so 27.37 and 29 are going to be two tough levels to break, or big levels to break, if it can stay above this, you know, in this 24.25 range in the open tomorrow. Okay, so yeah, big move for PCG. You can see here. Where's it at right now? Now it's at 23.80, but that is a monster bounce. Okay, let's look at DGAZ here at ticker symbol DGAZ. Closed up 64% today, so congrats to everybody in the chat that was on this. I know a lot of people were loading this yesterday, so good job. It was down over 50% yesterday, and that does set it up for a good technical bounce play. You know, RSI, you want to see get back above 30. Basically, the main thing here is this is what we call a dead cat bounce play. It was, you know, it's been in a downtrend, and then it dropped super hard, and yesterday's close was well below the lower Bollinger Band, which is at 427, and today the candles have worked their way back into the bands. Okay, so the big level to break is going to be the bottom of the gap, which is right here at $5. So it's going to have to get above $5 to make a run back up to EMA 4 at 552. Those are going to be the two big resistance levels tomorrow. If it stalls out at either 5 or 550, that's going to signal a temporary top. Many times dead cats will work their way back up to EMA 4 and then stall out at that level. And so keep that in mind. If EMA 4 fails to break, it is the lock-in profit zone if you're playing the bounce. And now if it breaks above that EMA 4, before you're looking for a gap fill, a run up to this red line here, just about, what is that, 610, 620 or so, that would fill the gap. Okay, if you look here at the 15-minute chart, you can see it heated up today, got above that middle Bollinger Band early on, signaling that it was in play, and then it turned the green line, the 50 simple moving average at 392 into support. As long as that level holds in the middle Bollinger Band at 432, it signals more upside potential. That's the dotted purple line. And so now it needs to break the bottom of the gap, which is just above $5. If it can break above that $5 level, you have the 100 simple moving average at 468, and then right up here, right around 624 is going to be your bottom of the gap. Those are the three big resistance levels to break above. So it signals upside potential above $5 and downside risk below 392. Okay, let's look at KOLD here. This is another way to play natural gas. This is the ultra short Bloomberg natural gas, and the options did return some pretty insane gains here for KOLD. So yeah, this is another options vehicle, and so yeah, it closed up 42% on the bounce. It has a very similar setup to DGAZ. The candles did work into the bands and actually broke above the bottom of the gap at 16, and so you want to see it hold that 16 level, and then the next level to break is going to be EMA 4 at 1731. If it can get above that level, it could fill the gap. Keep in mind, an upward gap fill, if it were to come up and hit this red line above $18 and then fill to break that level, that would be a temporary top. Many times an upward gap fill is a climax event. If it does break above, it has to stay above that level. If it does stay above, then it could work its way up to EMA 8. Fail to break EMA 4 when tested tomorrow at 1731. That's going to signal a temporary top, and then it's going to switch, and I should have put Boyle up here, and then Boyle will become in play. Boyle here is, let's see here. Let's get you Boyle on here. So Boyle is the inverse, and you can see here it's had a big drop today. And so, yeah, so Boyle was down 38%, and you can see it's dropping big time. This is the ultra Bloomberg natural gas, and yeah, what this needs to do is hold this EMA 13 at 45 support zone. If it broke below 45, it could come down here and test the middle Bollinger Band at 39.50. That would be a good bounce level. Okay, so yeah, so you want to be on the lookout, you know, for a technical bounce. This is just the first day of the pullback, but yeah, if it came down there and hit 39.50, that would be a potential level that it could bounce off of. If it held above 45, it could start getting, you know, to try to bounce before then. And then what you'd want to see is a break back above EMA 4 at 51.73. That's the pink line. It needs to get back above that level to push higher. Similar to back here, when the candles are above the pink line, it was really pushing. Yesterday's candle formed well above the upper Bollinger Band. That signal was just super frothy and getting way ahead of itself and due for a pullback. And today, that's what happened. I know this was such an easy short on natural gas. It was just the freaking dream setup. It was such easy money. Yeah, let's look at KOLD here on the 15-minute chart. It closed today above that 50 simple moving average, and then it got above the bottom of the gap here, and so it needs to break that 100 simple moving average at 742. If it can break that, then the bottom of the gap below 1850 will be the key level to break, and so 1742 around 1840 or so, and then if you can get above those levels, you have that 200 simple moving average way up there on deck. Now, if it were to drop back below that middle Bollinger Band at 1570, that's going to be your signal that it's cooling down. It really needs to stay above this bottom of the gap level at $16. So, you know, get below 16, that's going to be your red flag, and then below 1570, that's where it could really get going to the downside, and it could come down and test that 50 simple moving average at 1428. Okay, let's look at UNG here. So UNG, it was yeah. Let's see, yeah, because that last one, this was for the KOLD. I know I jumped back and forth from Boyle to KO and KOLD. If you look here at UNG here, this is the natural gas fund, and so this closed down 19%. So put options did well today. So congrats to everybody in the chat that loaded puts yesterday. I mean, it was a juicy setup. I mean, it was like pushing so hard above the upper Bollinger Band. It was really easy money that it was going to pull back, and yeah, it did. It ended up pulling back. It filled this gap between the two candles here, between Tuesday and Wednesday, and then now it's starting to fill this gap between Monday and Tuesday. A drop down to 31.50 would fill that gap. Look for a potential bounce off of EMA 13 at 30.74. That's going to be the next big support level. Yeah, if it were to break below that, then it could come all the way down there and test that middle Bollinger Band at 28.58 and fill the next gap, the third gap below right here. There's a gap, a gap, a gap, and another gap down here. So there's multiple gaps on the chart, and so right now one of the gaps is filled and the second gap is almost filled as well. Okay, let's look at UNG here on the monthly chart, and you can see what happened was it got up here above that 50-month moving average at 35.57, and then it pulled back below. That drop back below that 50-month moving average is a red flag. It's going to need to break that level to push higher. You can see that's also lined up with the high close from the back in 2016, and so it's really just in this channel here. And so it could come back down and test support. See how it's in the channel and it hit the top of the channel at 37.50. And so the big level to hold on a pullback would be the middle Bollinger Band here at 25.25. As long as it holds that middle Bollinger Band at 25.25, it can keep this new uptrend going. If it were to drop below, it'd signal continuation of the downtrend similar to back here. And so it just finally got above that middle Bollinger Band last month and started a new uptrend. So it has to stay above 25.25 to keep it going. Okay, so let's say, so check out UGAZ here. UGAZ, this is an incredible drop, down $110 in one day. Oh my goodness, that was just an insane drop. And so, yeah, you can see it had a crazy gap down open, and then it just pushed all the way into the close, all the way down to the middle Bollinger Band down here at 106.46. It's at 111 after hours, so it's trading higher. This is the big support level. If it can hold 106.46, this would be the reload level for the bounce. This is where it should have a technical bounce if the uptrend is going to stay intact. If it were to break, it could come down here and test this 450-day simple moving averages. It could possibly drop down to 87.27 if 106.50 zone failed to hold. If 106.50 zone does hold, if 106.50 does hold, then you could get a bounce back up here to EMA 13 at 128.95. Notice the gap filled here, the gap filled here, and this one right here is actually unfilled because it had the gap down. But yeah, it's just a crazy chart with lots of gaps and big moves. This was a parabolic spike followed by the big elevator down, and now we'll see if it can hold support tomorrow. Yeah, if you look here at UGAZ on the 15-minute chart, you can see here it came, tried to bounce intraday and got above that middle Bollinger Band and then pulled back, and so it's going to need to to stay back above. You can see this 111 level down here is 1030. What is this? The 400 400 simple moving average at 111.63. That's going to be the big level first. That's the last line of defense in this chart. If it were to get below that, then it'd be below every moving average on the chart. But what it needs to do is the move that it made at 2 o'clock. It has to get back above these moving averages and get back above this 200 simple moving average at 137.77 to get the bounce going. And so, yeah, huge move for natural gas. Big up, big down. The options traders were doing well. This is TZA. But yeah, you can see that. Yeah, if you were to have traded Boyle here and bought puts, yeah, that was a really good trade. Down 38% today, and then yeah, if you look at the puts here real quick. It was a big day for people that bought the DGAZ or UNG puts or Boyle puts. Yeah, you can see here. Look, it's up 1,400%. Look at these gains. 2,300% gain today. So yeah, the monster gains were there to be had. It was just you just had to pick the right trading vehicle to make it happen. All right, thanks for viewing this video. I really appreciate it.